morning, everyone. This is Anne-Marie. Today is September the 6th, and this is the SPY report, taking a look at the SPY, the IWM, and the Qs. Let's have a look at SPY very quickly. We can see that day before yesterday, we had a very bullish push, and then yesterday we had a big pop up through. Yeah, this feels like a premature stop to me. Not quite sure why. I suppose I could measure this candlestick and see exactly what 38.2 retracement event. Very interesting. That's usually not a good sign. If we lose this low here that I had marked, going to be in tough shape. Remember, I said yesterday if we got up above the 165.80, 165.90, we would indeed have ourselves upside momentum, and it actually did take us into that all the way up into 166.44, but that is a bit shy, certainly, of the pivot and of the ultimate test here near the 200. And so we're still looking for that. Oscillators still look pretty similar. I had somebody say, hey, what's the ergodic all about? You know, liken it to a true strength index. I think that would be all right if I said that mathematically. In any case, just answering that question in particular. All right, so same loss levels as yesterday if we want to be conservative. Otherwise, we'll take it a little bit higher. And then from that space, you know, we have a decision to make. We're still sitting above the moving averages and on our way to test the 200 in my mind. If I do look at that again, let's see what the 50% rule is telling us one more time. I do use it to measure the distance at the breaks. 61.8. Yeah, that pretty much tells me that that is going to hit the top there. Just might meander around prior. All right, let's take a look at the Qs. I did call 102.40 as the breakout level. It did not confirm over there at all, right? But it did come into the pivot. We do expect this gap to fill, and so there is more upside. Notice the formation: low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Remember, something in motion takes a lot more energy to reverse than to continue in the space that is already there. All right, so looking for another test of that breach. Now, what we'll look at here is the weekly pivot for the change, as opposed to the old support level that I have here from yesterday. Let's duplicate that then, so we can have a price marker telling us what's going on. Again, if you want the precise levels as well as the stops for intraday and swing events, you can get that from the SPY blog. We need to shift this 102.40 up to here, 102.53. Right? We've widened the space. We could probably try the 102.40. It might be worthwhile. But we'll see, right? We shall see. Okay, that looks like it, right? Things still look positive. Not sure why my ergodic is not sitting in here. Let's see if we can move that in. Note the measure for the ergodic true strength. Not as pretty in my mind, right? Doesn't have an underlying display, but essentially shares with us much. This one is much, much fatter than. Hang on a second. Let's see. Hard to tell what's going on there. All right. So if we take a look here with the ergodic, we can see we still have positive price action here, being supported by all of these formations. VWAP 50, 30, things look pretty solid here. We should be trapped in this range. Not really sure we're going to have a big move today of any kind, though with all the reports that we have coming this morning, let's see what we have this morning. We have the monthly employment situation event. We're going to have non-farm payrolls, general unemployment rate, average hourly earnings, private payrolls, all of those things are coming out in one fell swoop. So that's a lot. It's a lot of information. And if it's unexpected, it's a bit of a driver. Someone said yesterday, what we have been doing is selling the news. We shall see, right? I'm just looking for the levels. What this has done, though, check this out. Big level here, 76.84 is actually an aggressive long, with the 77.20 area actually being the best space. But we did pop out and up over that area, so a couple of swing longs did trigger. So we're going to have to watch out for that to make sure they hold. Still support region. We are above the 200, above the VWAP, above the 30, above the 50. Upside momentum still there. If we pull back, it should be into support, the top of the gap. That's going to be my space that I'm going to say, hey, listen, once I recover up, after I bounce back here and I recover this level, I am going to take it long because I do believe it is going to move to the upside. There's a lot of stuff not to be bullish about, but the charts seem to be saying that they're bullish. We're sitting on top of all the moving averages. What else can you look at? We are most definitely in sideways pattern once we look at the 4-hour. But my philosophy is this: if you have a long and it does not break support, the trade is not broken. Right now, we're breaching all those moving averages. Let's just take one look at the 4-hour charts for everybody so that we can see. And so we can see that what we're doing is trying to crest over these. That's just turning positive right there. So that's got some pretty good activity. And then for this one, of course, it's a little bit messier because of the fibs. Let's see if we can remove that ratio. The ratios here, looking at 50%, still looking for that particular pullback. But now watch this being squeezed in between these moving averages. Just that squeeze event the squeeze event there is something to be concerned about. You don't want to play around inside of these measures. It just doesn't make sense, right? Not the most wise thing to do. So let's watch for pops and drops, or drops and pops, gaps to fill. And we do know this: if we pop out and hold these breakout levels, these charts should run. And if we break down out of the levels, they should also run, because we're in a space that's very, very tightly squeezed. Good luck trading today. Have yourself a great weekend.